Hello, my name is Jamar Brown with Sell Buy Homes Realty, and we have a great video for you today. We will be discussing the 5 most popular options when it comes to the financing on purchasing a home. Now, I reached out to an expert lender that I work closely with, and she's going to go over the details of these options so that you can understand which one may be best for you. For more videos like this, make sure you click the like button, subscribe, and also click on that bell so you can see more content coming from us.
Hi, I'm Megan Slater with Compass Mortgage, and I'm here today to go over the 5 different types of mortgages. So you're going to have your FHA, we're going to have conventional, VA, USDA, and then non-conforming. The top 2 that you're going to see typically are going to be FHA and conventional. Now let's go over the differences between them. So FHA is going to be a little bit easier to qualify, and that's one of the biggest benefits. It's only 3.5% down at any time that you're going to need as a borrower, and they have a much more lax system on their credit score as well as their debt ratios, which means they allow a borrower to have higher debts than what some of the other programs allow. The second one you're going to see is conventional, and conventional is going to typically be for your borrowers who are putting 5% or more down. One of the biggest benefits with conventional that you don't see with FHA is going to be once they hit 20% down, they have no mortgage insurance. So the people who are putting down a higher down payment are typically going to lean towards that type of loan. The other big thing is that for conventional, they are much more strict on the credit scores. So you're going to have a higher credit score in order to qualify for conventional. Now, the other 2 that you're going to see more often are going to be VA and USDA. Now, these 2 are 0% down, which is great for the borrowers, but they each have their own benefits to them. So USDA is going to be able to qualify across the board for the 0% down, but it's going to be more geographically specific. So you're going to have to check your addresses for that one. USDA also takes a little bit longer in the underwriting process, so you're going to have to manage that whenever you're doing your contract. You're going to see 45 to 60 days on USDA, whereas with the other programs you'll see typically around 30 days. Now the other one that we're going to talk about is going to be VA. VA is also 0% down, but you do have to be a veteran to qualify for. So that's going to be something that your lender is going to check for you. VA really is one of the best programs that you can find just because it is 0% down, and just like FHA, they are a little bit more lax in their guidelines and their debt ratios. So they allow a veteran to have a little bit more debts than what some of the other programs allow for. Our last one is going to be our non-conforming. This one you're not really going to see a whole lot, and that's because they have a little bit higher interest rate than the other loans because they take on a lot more risk. They allow self-employed borrowers not to necessarily use their tax returns, or somebody who doesn't file taxes, period. So they're going to allow a bank statement program. That means that these lenders take on much more risk than the other ones, so you're not going to see it as much, and some lenders straight don't even offer them. Now that's going to be it for our main loans that you're ever going to see in the mortgages. Okay, so now I would like to go over just some frequently asked questions that I hear a lot. The first being the first-time home buyer question. I've never purchased a home before. What kind of programs are out there? What can I expect for a down payment? There is a few programs out there that you could potentially qualify for. One being Keystone. They give down payment assistance to those who are in the lower to mid income category. So it's definitely income specific, and for those who don't have down payment funds to put down. And they also give some closing costs too. Now this program runs out of money pretty frequently, and it also actually drives your interest rate up. So you will have a first mortgage and a second mortgage. So in a lot of times it drops down your qualifying amount. So it's better for people just to be able to come up with the down payment on their own. There is also a conventional 3% down program as well. That's a great program that some people can qualify for too, but once again, it's income restrictive. So you have to be within a certain income category in order to qualify for it. Once again, the first time home buyers program that a lot of people end up using is going to be FHA. Even though it's not necessarily only for first time home buyers, it still offers that lower down payment option, as well as giving you a broader range of amounts that you can qualify for. Now on to our second question is going to be, should I get pre-qualified before I start looking? And the question to that is always going to be yes. So you don't want to be out looking for a home and either it's over the range that you can qualify for, or you could be cutting yourself short on a home that you really like but you think that it's too much. So talking to a lender first and getting pre-qualified is going to put you out there in the best case scenario that you can have. They'll also be able to go over the monthly payment options. You may think that a certain house is over a monthly payment that you're comfortable with, which is where your lender will be able to go over all of those numbers with you and make you more comfortable. Now, how long does it take to close? So in most cases, from contract to close date, it's about 30 days. Some lenders are a little bit longer, while some can do slightly less, but on average it's about 30 days. Now, some of the programs such as USDA automatically extends that because you are going through 2 approval processes. So before you get into a contract, you definitely want to ask your lender what their turn times are, because you want to make sure that you're setting expectations up correctly. All right, so as far as the pre-qualification side, a lot of questions I get is, hey, what do you need and what are the requirements? Most people get confused with the necessity of having 2 years on one job. Okay, I am going to be looking at a 2-year history of both residential as well as income, but you don't necessarily have to be at the same job for 2 years. You really just have to have been employed for 2 years, as well as residential. You don't have to be in the same address for 2 years, but you do have to provide 2 years worth of addresses. So we're going to look at the income, the debt, and the credit of every individual. So we're going to do a full evaluation of their entire profile in order to get them a pre-qualification letter. At that point is when we collect our documents. So as far as documents go, we're going to need 2 years worth of W-2s, as well as a picture of their ID. We're going to look at their bank statement, make sure that they have their down payment. And we're going to look at a most recent pay stub and make sure that whatever income that they gave us is accurate. And for our last question is going to be, what is the minimum credit score required? Now this can change from time to time. Typically it's 580, and that's going to be FHA, goes all the way down to 580, sometimes even lower. Now different circumstances within the economy can sometimes change this. Whereas when the COVID crisis hit, all of the lenders upped their credit score to 640, and that was across the board. Things have started to relax some, but before you really discuss credit score with any individual, I would definitely recommend reaching out to the lender or having the client reach out to the lender to see what the guidelines are currently. All right, so let's go over your different options in lending. So you have your banks and then you have your mortgage brokers. Your banks are spread across so many different sectors such as car loans, mortgages, banking, all of those different areas that they have to spread themselves across, whereas your mortgage brokers are only focused in mortgages. With that being said, I have 10 to 15 different lenders who are always competing for my business. And what does that mean? That means lower rates for your borrowers. Also, in most cases, it also means lower fees for your borrowers. This means that your borrower may qualify for more even, which will put us all in a better position, right? Now, why choose me individually? So I have great communication. You'll be able to reach me during weekends, evenings. I understand that when you're out house shopping, you're shopping on the client's time. So you will always be able to reach me on my cell phone. Also, I'm local, so you're promoting and giving local business to those who need it. In addition, you will also find that close times are a little bit better. So whenever you're with a local lender, they are more specific to that area. They're not going across different regions. So you may find that their knowledge in the area is much better, and therefore they're pushing for faster close times because they understand the area and the needs. So you can reach me at any time on my cell phone at 863-272-8069. Look forward to hearing from you.